This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. Finally, yesterday, we had a little reaction to the markets where put protection was monetized, as I said it would be. That's not a surprise. It was right here. I said, okay, we're going to go fill the gaps. VIX is going to come a little bit down from that 2350 level. And sure enough, that was the fade. Perfect fade, perfect fade. We are gapping down. So we're gapping down to that 595 QQQ, and we're gapping down to 673 for SPY. And that's basically the call yesterday. So equity market is still digesting, but it's still rolling over. We had that perfect head and shoulders digestion, dump on Monday, back into resistance, dump on Tuesday. Again, the whole thing is still reacting, though, to, let's say, instability in the Middle East that can trigger capital rotation. That's basically it. When geopolitics escalates, capital rotates fast. So what happened yesterday? Look at this perfect little chart here. Look at this bounce at 1805. And do you remember the level that I gave? This is hysterical, by the way. I said 1748. And what did it hit last Thursday, February 26th? 1750. That's close enough. Boom. Held. Gorgeous, very much follow through. Yesterday it had the shake and bake, which is 2520 monthly resistance. It got sold. Now look over here on the intraday. Look at that. Pop, pullback is shallow. Pop makes a higher high. Pullback is shallow. It's a higher low. Pop, higher high. Pullback is shallow. Lower high. You see, this is volatility on the intraday. This is volatility on the daily. We get and stay above 2020, and we're going to have this take off. So we still have volatility in play. This was my chart that I showed you, if you recall. Every time this crosses over on the oscillator, we have sustained volatility. It doesn't mean we can't have some waves of it where it comes back down, goes back up, or in this case, you can see where it just started here. So innocently back in February, and then look where it went from a low of 15 to a high of 60. We had VIX explode, but this is why technicals also kind of help. But the point is, you can see VIX is very excited. So short duration, those puts got monetized yesterday. VIX got sold as discussed. And then boom, we're right back into a volatility regime. And the only thing that's really in play right now is the energy and volatility and defense contractors. And then we got hit on everything else. We're not quite there at 67.70. I wrote about this yesterday, saying it looked very much that we were going to get a rollover here. Gold gap down was bought for now. So we opened lower. We hit that 2520 monthly resistance. That's what you want to keep above for your hedges that are continuing to work. Oil long, obviously. VIX long, obviously. Markets short. Dollar long. Equities are under pressure. We did have a nice rotation last Thursday with some software. Today, they're all getting hit for the most part. Crowd of reports after hours. Anyway, the point is, I had said we have pretty much sideways on the daily chart for SPX for months. So you can see this chop on this 6807, and that 55 days starting to flatten out, and in time the 200 day will start to flatten out, and that'll be target in time. But for right now, it's the weekly that has me most focused. So we've got this rollover happening with the weekly very clearly. This is the level I gave yesterday and the day before, and all this stuff is we have to break 67.70 on SPX, and we will flush to 6,700. It'll be a quick one, by the way. It'll be quick. See, in the same way this went up, see this week, at the end of November, how robust that is? This is what we're looking at. What if we break that 6,700? It'll just flush. And there are some areas lower that I gave. If you recall, I gave 66.66. It's a little punky. I know. It's a little cheeky. I don't care. That's where I see it. And we're going to play around this region, 66.30 to 65.30. So you've got 100 points, basically, that SPX can fall in a hurry. You can have a reflexive bounce, and then it can keep going. I just don't see a particularly robust backdrop. I think we need to kind of have that market enthusiasm start to price not just a growth scare, but remember that market that is ignoring a war that is durable and embarrasses us can turn into a recession scare. So for right now, we're not there, but definitely we lose, and we haven't really won a war in a long time, but if we lose, then this hegemony mantle that we have worn will be dinged. It'll be hit. So that's one thing that I'm really focused on. And of course, volatility. And if you feel like, now's just a good time to get out of the pool, it's fine. I mean, you have few options as it relates to geopolitical risk, which is it needs to end and there to be peace for the market to move higher. This is, historically speaking, 1950 is a critical long-term, like 20 years. You keep it above, you've got spiky potential. You get it back below, it's suppressed, and the market can move higher. So 1950 is the mean. Think of it, it is the mean on a 20-year look back. But 1929 works better on the intraday. And then I've got 2520 I've used for years as well. And then above that, I've got basically 40. So this is a massive area of target. So when we get above this, we usually have some kind of freak out move in VIX. And then once it comes back inside, let's call it 40, but it's really 38.94 VIX, doesn't matter. These are levels that get me big picture of when it's safe and when it's not safe. That's how I look. I'm an analyst of risk. So when we get above this, I don't really have a higher level because we don't stay above that very often. But when we come back inside, I know market's going to move higher. Like I'm really highly convinced. And we come back inside 30, come back. The point is we're still moving up. So this isn't safe yet. The most impressive was yesterday, this EWY. So we already had the beautiful bullish expansion back on Thursday, the 2026, which was also that same VIX type of movement. And now look at the rollover, was gentle. And now we're down 11% in EWY. We've got Taiwan also down 5.5%. We've got Japan rolling over down 6%. Bingo, perfect. This is a rejection of size for those who were patiently waiting for this to roll over. In SNDK has slowly rolled over. Where are my marks here? Hello. Micron, Western Digital, and Seagate. They have now finally rolled over. They were absolutely in the making. This was the keep it below for STX, this 458 area. We hit it 3 weeks in a row and started to distribute. So these are absolutely in play. Your STX is hanging by its fingernails at the 55-day with the Bollinger Band opening up. Could it snap back into 384 area? But this is already a rollover. So STX hit the 55-day. Micron has not hit the 55-day. That is definitely a stronger beast. SanDisk has not even, it just started to come underneath the 21-day. And I do not know where my lines are. But anyway, these are very big reversal patterns on a monthly. So you get this extended kind of parabola and then it completely deflates. And here we are with EWJ, EWT, and EWY, which is Korea. Patient shorts for the memory DRAM sector with EWY, EWT, EWJ just absolutely rolling over from 154 to 129. That is called trapped longs. That is why I always say parabolas are trapped longs that trigger volatility and liquidation. There we are.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.